Good morning, everyone, and welcome to 7 Investing Live. Today is June 3rd, Wednesday. We're glad to have you here on the show as we take an innovative look at several of the stock market's most intriguing opportunities. My name is Simon Erickson, founder and CEO of 7 Investing, joined by our executive producer, Heather Horton. We've got an interesting show here today. We're going to talk about Salesforce. Stick around that one, CRM. This is one of the world leaders in the enterprise software market, the earliest leader in the cloud computing and software as a service market. It has been a fantastic company in the enterprise software world for more than 2 decades. However, the stock has been stuck in neutral for most of the last 3 years. And now selling for less than $200 a share. Is Salesforce still a long-term buying opportunity, or is this a stock we think is going to be stuck in neutral for the next 5 to 10 years going forward? We'll dig into their first quarter 2027 results that they just announced. In the meantime, if you do want to go check out our coverage of Salesforce, you can always go to 7investing.com/CRM. That's where you can see our company homepage for that, or all of our stock market recommendations at 7investing.com/recommendations. Let's dig into Salesforce. We just got first quarter fiscal 2027 results. Company came out there and announced some interesting stuff. We got our first graphic that shows Q1 2027 financial results. Let's take a look at that one first. Here we are. It was $11 billion in the single quarter that Salesforce just reported. This is an absolutely massive company. Of course, one of the largest customer records that's out there. Their CRM database has got a ton of commercial information about customers all over the entire world. They then packaged that customer database and then built upon it different apps to work upon that. Marketing campaigns, email campaigns, whether that might be doing things for commercial activities. And it's all kind of tied by this unified data set that they've now refined and incrementally improved over the last 2 decades. And look at this. You've got a forward backlog of customers, remaining performance obligations of more than $67 billion. 33 billion of those are current or are going to hit within the next 1 year. So you're talking about a business that's doing $40 to $50 billion of revenue top line every year, continuing to grow at 12 to 13%. And underneath that, you can kind of see the breakdown of how Salesforce derives its money today. You know, if it's getting $10.6 billion in subscription and support revenue, that's almost all of its revenue for the quarter. It's split between this kind of customer record that you're paying for access to for all of the information that you've got now data of all of your customers. That's the Data 360, and then the headless platform and other, which is 3.7 billion. And then you've got the apps that is acting upon that. That's called Agentforce, and that's 6.9 billion. So that's kind of the split of how Salesforce, this massive enterprise software company, is deriving its revenue. And look at the growth rates there. 25% year over year for the, call it, customer data side of this. And then 9% year over year for the apps that are working upon that. Now, there was an acquisition just this last year of Informatica, which is skewing those results. That's why you see 25% year over year for the data side of this. Informatica was giving a lot of customer records. It was kind of feeding that side. That's an acquired growth rather than just organic growth. But you can kind of see the strategy for what Salesforce wants to do is basically the same as what it's followed for the last 20 years. Go out there and make a lot of acquisitions that are either going out there and serving as a customer record, acquiring all this a massive amount of information that's out there, scrubbing it, making it accurate, and then taking action upon it. And so the taking action upon it is less and less dashboards where people are clicking on things and clicking on boxes to do it, and is increasingly AI agentic. The headless platform refers to Salesforce being just embedded quietly and behind the scenes in other apps, right? You've got APIs of Salesforce that's embedded within Slack, that's embedded within your email programs, embedded within any of the other siloed data or the platforms you're using. It's just kind of running quietly. And then it's charging customers based on the agentic workflows that are just kind of consuming these credits that Salesforce is selling you every single year. And so Salesforce is no longer, again, just a per seat license that you're paying a license for every person that uses it. It's kind of behind the scenes, doing a lot of stuff with all the data that it contains and using AI agents to do whatever it is you want them to do. Deeply embedded platform, now doing $40 to $50 billion a year. And look at this. This is really neat. I think Salesforce is one of the unsung heroes in the AI enterprise software world. I say unsung, maybe uncelebrated. It just seems like they don't get enough credit as some of these other companies are doing really cool stuff like Palantir are, you've still got a company like Salesforce that just isn't getting the same respect as some of these other high flying names. But look at this, converting intelligence and agentic enterprise work, 1.6 billion interactions with the discrete tasks that are being run by the agentic AI that Salesforce offers there. That's the agentic work units, as they describe those. You can just kind of see how this has skyrocketed since they kind of launched this Agent Force platform, even just 3 years ago. It's incredible to see how quickly that Salesforce is growing this. I would like to pull up another slide that shows the agentic ARR. This is the annual recurring revenue that's growing at triple digit rates right now. So again, the larger part of this pie graph, that $2.2 billion in annual recurring revenue, is from what they're calling Data 360. That's a customer record. You're paying for usage of that data that you're using. You're acquiring it from all over the place. You've got the customer record that informs all of the decisions that you make from the commercial organization. Almost 2/3 of revenue that's from this agentic platform is kind of coming from the customer record itself, right? And then on top of that, you're using it for AI agents to do their thing. That's where you come up with the Agent Force annual recurring revenue of $1 billion a year. And look at the growth rates on this. Combined, even with both of those, you're tripling year over year. They're cloud-based AI software tasks, and revenues derived from those tasks are tripling, up 200% year over year, now $3.4 billion in annual recurring revenue. This is clearly a company that is benefiting from AI. This is one of the largest and broadest based AI enterprise software companies on the planet. And Salesforce, unlike so many other enterprise software companies, has not rested on its laurels or had a tough time transitioning in this AI world. We've seen a lot of companies out there that we have to question, are they going to get displaced? Are they going to become irrelevant? Is AI going to just completely eat their lunch and do with agents what they were previously trying to charge on a per seat basis to do? I think Salesforce has done a really good job in its entire history, really, of almost 3 decades as an operating company, of adapting to where the world is. And Mark Benioff does a really good job of saying, okay, this is where Salesforce was 5 or 10 years ago, but this is where I want Salesforce to be in the next 5 or 10 years. He clearly sees that AI is changing the game in enterprise software. He was quick to adopt it and make a really, really large platform even more valuable by incorporating AI agents into what Salesforce is already doing. So you've got the same customer record, right? The same CRM that you built for 2 decades. Then you build apps on top of it, and now you've got AI running those apps on top of that. I think it's a brilliant strategy, and Salesforce has remained very, very relevant. So let's look at what, as an investor, we're interested in investing in this company for. We've got a slide executing to our investor day commitment. So, of course, Salesforce is not just a company that comes out there and says, hey, okay, things are going okay. Here's what the quarter looked like. Here's what next quarter looks like. They want to not only give a forecast for us for fiscal 2027, which is where we are today, but also 3 years out too. They've got a roadmap for the next 3 years of where they want to be in fiscal 2030. And so you can kind of see the targets that they put out there. If this is a company that's going to do between 40 and $50 billion of revenue in 2027, fiscal 2027, they're saying that's going to be 50% higher within 3 years from now. $63 billion of fiscal 2030 revenue is their long-term target. And by the way, a year ago, that was $60 billion. So they're already increased it by 5%. I expect they're going to increase it even further as they continue to beat their targets. And they're saying in terms of a compound annual growth rate, that's about 11% year over year, which was no problem for them here hitting in the last quarter. Again, this is a very profitable growth. You can kind of see the increase in the operating margins that you get over there. And then the capital allocation. This is one that I want to touch base on real quick before we start talking a little bit more in a Q&A about this company. But the company, just in this first quarter alone, this is mind-blowing, in my opinion, for a company that is a market cap of $157 billion today. Their diluted share count was reduced by 10% in the first quarter alone because Salesforce put $27 billion to work in buying back its shares, buying back 114 million shares in this accelerated share repurchase plan that they've got. And by the way, $27 billion, that's about half of the $50 billion repurchase authorization that they just authorized here in March. Salesforce is being very unambiguous and very, very clear that's saying to the rest of the market, look, we're doing exactly what we said we're going to do. We are using AI to our advantage. We're growing our top line now at double-digit rates. We're getting the annual recurring revenues from this new business line that's incredibly profitable. And if the market is going to continue to sell our stock for less than 13 times free cash flow, if y'all aren't going to give us a better multiple than that, we're going to put our own capital to work. We're going to buy back as many shares as we possibly can. And they put their money to work. They borrowed $25 million in the first quarter to go out there and buy back their stock. I love this move. I thought it was a great capital allocation move. And I think they're going to do it again here in the second quarter if we still see Salesforce for less than $200 a share. So one more slide. Let's look at how big of a deal this was for the capital return program. This is the cherry on top for investors. Is that, like I said, they borrowed back money. They look at that chart. Look at the amount of repurchases they put to work here in the first quarter. They've accelerated. Benioff and the rest of the team says, look, we're going to go out there and not just offset dilution from stock-based compensation. We're going to reduce our share count by 10% in a single quarter, which is what they did here in Q1. And they're going to continue to do that probably for the rest of fiscal 2027. So putting this all together, connecting all the dots for what I see as an investment for Salesforce, you've got a company that's growing pretty nicely, for the size that it is. And as embedded as it is, already growing still at double-digit rates. I believe 11% year-over-year revenue top line growth. You've got one that's churning out a ton of free cash flow. There's not a whole lot of reinvestment required for this business other than the AI agents that it's already putting to work out there. And so what does it do with a company that's growing double digits, churning out a ton of free cash flow? It's going to go out there and say, we're going to go back and buy back our stock. And if it does get to a point where the stock is fairly valued or it's hitting a multiple that it likes, say that it says it wants to slow down or it uses up all of that $50 billion repurchase plan, you've also got a dividend, which has not been shy about increasing as well. So this is a great company. It's still a really attractive investment opportunity, in my opinion. This is not the same Salesforce that was hyper growth a couple of decades ago, but it's a very mature cash flow generating machine that is compounding our returns quite nicely through that share repurchase program that's got. I think that Salesforce, in my opinion, is a good long-term buy and hold opportunity. Still very relevant for investors here today in 2026.
Yeah, it's a stock I've held a really long time. So I do love to see the share buybacks. That's great, especially this kind of lower multiple. What is something you would like? What else would you like to see from Salesforce going forward to keep it within this buy category?
The acquisitions are going to get harder. It's kind of like the Warren Buffett problem. You get big enough, and then it's just hard enough to get something that's going to move the needle. Informatica was an $8 billion acquisition last year. And at some point, I think you're going to get a sufficient amount of data that you just don't need to go out there and spend $8 billion on acquisitions like this anymore. You've got to train the AI with good data, and you want to scrub it and make sure it's accurate and make sure your agents that are doing their work aren't just giving you BS out for BS in. But I think at some point you're going to get a sufficient amount of information. You're already the largest customer relationship management platform in the world. You go out there, you make plenty of big acquisitions. At some point, Salesforce is going to have to convert its acquisition strategy into a capital return strategy. And I think we're already seeing that. I think we're already seeing that, Heather. That was kind of a big step in the first quarter where we said, okay, look, $25 billion in buyback. You saw how much larger that was in scale than the previous years. I mean, this is a big deal. And Salesforce has always been a grow by acquisition, fold it in, keep growing the top line as fast as you can. It's going to be really interesting to answer your question of what I want to see next. Can you convert this business that's always been very acquisitive, always been about top line growth, into this cash flow, cash compounding machine? And can it maintain its pricing? Can it keep charging as much as it is, as large as it is? Right now, yes. And it seems like, a lot of companies really like using Salesforce and building their own agents to do whatever it is they want to. But it's going to be an interesting, maybe 18-month to 24-month transition to see if it's really got the capital allocation chops. Once it kind of has used that repurchase plan, I think it's going to have to start paying a higher dividend over time too.
That makes sense. And are there any flags that people should be watching outside of that? I mean, it kind of sounds like that's what we need to watch.
To some degree, Salesforce is cannibalizing itself, right? If you used to be a company that was charging, per seat, per license for people using this dashboard and, clicking on things. You kind of have to disrupt your own business when you're saying, okay, we're going to have the AI do it. And now you pay us for credits for the AI on a per usage kind of basis rather than a per seat kind of basis. It's something that you just kind of, software companies do that. Everybody wants to be usage based now. Nobody wants to just pay for a platform they have to pay per seat for anymore. So I think that as long as you kind of keep capturing those operating margins and keep that high, Salesforce is charging for credits right now. They're flex credits, so you kind of use the AI agents to do their thing, and then you pay based on how much they're doing for you out there. As long as they can maintain that, I think they're in good shape. But definitely something to be keeping an eye on.
We have a comment that kind of ties into all that from Stefan. How do you expect AI to impact the market at large?
Yeah, great question, Stefan. I mean, this is one that is hitting home for enterprise software, right? Look at what happened in the SaaS apocalypse earlier this year. Software as a service, just companies got shredded because everyone's saying, how do you charge these businesses anymore? It used to be if you were an enterprise software company, you were golden. You got embedded, you had your budget, people were hiring more employees, and they were using your software more, and you just kind of kept charging for more seats, right? This was the typical kind of Zoom model. You keep so many people signed up, and you just keep making more and more money. And AI has changed that game. To answer your question, how does it impact the market at large, especially the software market? That's not how this goes anymore. Companies have to reconfigure their offering, they have to change the app and how they're charging companies to use their app anymore. And I think that some companies did this very well, and some companies have not done this well. The same thing happened in cloud computing, where software as a service, right? You used to go out there and you do these giant deployments, you kind of plug everything into um, your own data centers that you were using. Even before that, it was CD-ROMs that you would install, physically on computers. And then all of a sudden, everything was run out of the cloud in these kind of central data centers. That was the first migration. Now, all of a sudden, we're AI agents, which are doing the same work that human beings used to be doing. Do you trust AI to do your job or to help you do your job? There's a lot of companies that are trying to do that and be credible, but very few of them are up the same scale of what a Salesforce is, where you've got just all of this information that you've compiled for 2 decades, and you've started building a platform to ground up with very, very clear and accurate marching orders on what the agents are supposed to do. I think that there's going to be a lot of companies doing this. I don't know. I don't know how many of these enterprise software companies are going to make that jump. I think it's a lot harder than we're giving them credit for right now, and that's why a lot of those companies sold off. A lot of those stocks are still much lower than they were a couple of years ago when this was a much more obvious trend.
It seems like Salesforce's massive data backlog is something that is going to really, I mean, obviously they're using it, and that does give them a competitive advantage for the switch over to AI. Um, what are the big competitors for Salesforce that we need to be watching?
They keep buying them. CRM, they've got about 20% 23% market share globally of their market. I mean, it's just massive. And
Yeah.
everybody's trying to do this. All the big tech companies, the Oracles of the world, everybody's out there has got their own kind of flavor of CRM, customer record, something, all these things that are kind of tying information together and then using it. It's just a matter of, who you're comfortable with and who have you used in years past. You tend to be embedded, you use the platform for a decade, you continue using it for the next decade. Salesforce is no different. It's just a matter of what can you add on top of that, and how quickly can you continue to grow that. Um, Tripling year over year, agentic AI, in that Data 360 platform. Expect that to continue. Salesforce is also using this internally, which is kind of interesting. You saw Mark Benioff reallocated 4,000 jobs in customer service, where he is now using AI to answer a lot of those questions when people would call in and need help with things. He's now put them into sales and marketing roles, specifically to drive that 200% growth year over year. He's not laying those people off or firing them. He's just saying, I don't need people to be doing these jobs anymore. I need them to be go out there and growing our business. And I think that's kind of a pretty smart way to do this. You've got a talented workforce that knows the platform and knows what Salesforce has done. Let's go after where the growth is rather than being stuck in kind of these legacy cost structures that they used to have in the past.
That seems a much better idea than just mass layoffs and then rehiring.
Yeah,
Cheaper,
yeah.
too.
It's tricky right now. There's a lot of work that was done by humans is not being done by humans anymore.
For sure. And I feel like they're also in a good position if AI tokens become more and more expensive that they can balance the cost versus people, especially if they've kept the entire workforce, which is very useful.
Yeah. So, you get a kind of a nice, call it a 10% reduction in the share count that's out there right now. On top of that, you got a nice little, call it a 0.9% dividend yield that they have not shied away from issuing just here recently. And then she certainly seem to be open to increasing in the future. So I think that Salesforce, this is a good company to own. This is a very profitable company to own. A lot of people just kind of say, oh, it's yesterday's company. It's not the same Salesforce as it was at the turn of the millennium there, but I still like this as an investment opportunity. I'm gonna stick with this one going forward. CRM, ticker for Salesforce again, 7investing.com/CRM if you want to check that one out. By the way, Heather, if you like to see all of our recommendations, you could see if Salesforce is an official recommendation. You could see if it was one of our best buys here last month in May. And you could also see all of our 5 best buys this month. Just 7investing.com/subscribe. In fact, you get 7 days completely free. You can see everything that we offer. You can see all of the premium content we have. You're invited to our next monthly conference call, our subscriber calls, where we check in on a whole bunch of companies, more than a dozen every month. And of course, the official recommendation every month as well. I would encourage you to go check out on that link, 7investing.com/subscribing. Click on that right there. Boom, 7 days free. Go check it out. You have nothing to lose. If it's great for you and you love it, $200 a year is what our price point is. I think that's very retail investor friendly. Especially if you invest in some great companies that can make you some good profits out there as an investor. So that's Salesforce. And today, again, was June the 3rd. We've just booked Nick Rossalillo for an upcoming show from Chip Stock Investor. Looking forward to talking with him here in the near future, as well as our buddies from Chit Chat Stocks. We're going to have some guests showing up on the show next week. We'll be checking in again on what's going on in the semiconductor industry, what's going on in the AI industry, and then also how that's going to impact a company like Salesforce. So go check that one out if you'd like to. We'll be back with you again next week. In the meantime, have a great week. Have a great weekend. Be safe out there. Talk to you again very soon.